Are you getting a nice tax return from the IRS this year? And that was the question. Should have been a question. Are you? And maybe you're wondering what to do with that money.
Our financial expert has a couple of suggestions this morning. Morgan Almer with the Village Family Service Center. Thanks so much for being here.
Hello, thanks for having me.
Yeah.
So we had another expert on in Bismarck who said ideally you kind of want to come in at zero with your tax return. Is that your same assessment?
Absolutely correct, yes. When we borrow money, we have to pay interest on that money, right? The government, in essence, when they're paying you a tax return, that's your money, but they don't pay you any interest on that money. So absolutely breaking even is the best thing you could do every year.
But obviously most of us get a tax return. So if you do, what are some good suggestions to do with it?
Well, probably number one is to tackle any high interest rate debt that you may have. We know interest rates on credit cards can be very high. And maybe if you wouldn't get such a big tax return and maybe would have gotten that money in your paycheck throughout the year, you could have paid cash for your purchases. But instead, you're getting a refund, and you might have some credit card debt built up. So number one suggestion is to pay off that credit card debt if you can.
There's a really easy way to figure out. It's a website, youcandealwithit.com.
Youcandealwithit.com is a website that you can enter in how much you owe and the interest rate which you owe, and it'll tell you if you made the minimum payment, how long it would take you to become debt-free.
Okay, let's do it. Let's figure out, right, for all our audience, if we've got $10,000 debt, what kind of interest rate should I type in?
Well, you know, it depends. If we're looking at maybe retail department store credit cards, it'll be a very high interest rate, maybe 25%.
All right, let's try 25. Okay. And monthly payment? A
minimum monthly payment, if we were to just make the minimum, would be roughly about $225 on $10,000 worth of debt.
Okay, $225. And additional?
Let's say we're not making any additional payment. Let's hit calculate.
Let's just calculate.
And if we go down to the bottom there, we could see that it'll take us 127 months, and we will pay over almost pretty close to $18,000 worth of interest just on this $10,000 worth. So one way to look at it is it cost you $17,000 to borrow $10,000.
Wow.
Not a really good deal when you look at it that way.
So pay off more than just the minimum.
Absolutely. If you can pay more than the minimum, that'll really reduce the time that it takes to pay that debt off.
Go ahead.
So let's say, do we want to stay on debt? If you're not in a lot of debt, what are some suggestions that maybe you put it in some sort of form of investment? Or?
Sure. Well, the second step would be to take a look at maybe an emergency savings account. If you do not have one, it's highly advisable that you get a savings account. Have 3 to 6 months worth of your income into an emergency fund. So just in case maybe a layoff happens. I mean, we hope not, but maybe it happens. Maybe you get hurt and can't work. It would be nice to have some funds to rely on to get you through to maybe when you're back to work.
Exactly. What about kids' savings? Put it in your college savings?
That's a great idea. I know that when I was on before, we talked about student loans. Maybe if you don't have to take out so many student loans, if you could put some money away for your kids' education, because unfortunately the cost of education is rising by a lot every single year. And if you could put some of that money away in some sort of investment product to help fund your child's college education, that would be another idea for the money.
It sure would.
Can we back up for a second to the 3 to 6 months? Because I think for some people, they hear that and they go, come on, man, I'm not going to put away 6 months of savings for, in like a savings account or their account, because I would presume a lot of people might tap into that at some point. So is there a kind of account where they can put that money aside where it's not as easy to tap into, but yet still give them that stability?
Sure. One thing that works for folks, and we see them advertised all the time, you can open up maybe an online banking account. I know this kind of sounds different, but you don't have a local branch, and so it's kind of like get the money out of your account, out of your mind. It's in an online account. They're out there, and they happen to pay much higher interest rates than local bank accounts.
Oh, really? Interesting.
They don't have brick and mortar places to and the overhead to have to run those. So you can get a better interest rate on sometimes doing an online account. Also, then that kind of gets it away from where your main checking account is and your main savings account, and hopefully you can forget about that.
Much more with Morgan Almer when we come back.